payments podcast from Bottomline Technologies.
It's a well-recognized fact that payment fraud is on the rise. Fraudsters are exploiting processes, technologies, and education gaps as fast as regulators, banks, corporates, and consumers can plug them. There is one type of fraud that, in comparison to other types, gets little attention. That's insider fraud. The biggest danger for banks, and corporates actually, is that most insider frauds go undetected and, as such, are wrongly considered less of risk. In fact, the 2021 risk quantum analysis showed that in the UK, fraud was cited as the cause behind 38% of total operational risk losses by value on average. The year before, it was 22%. So the problem is far bigger than people think. Hello, I'm Ruud Grotens, Head of Solution Consulting for Fraud and Financial Crime at Bottomline and host of today's payment podcast. On this topic, I'm delighted to welcome our guest, Elizabeth Humphrey. Elizabeth is a financial crime researcher from Themis, an anti-financial crime technology firm which helps clients identify and manage their specific financial crime risks through a combination of innovation, insight, and intelligence. Hi, Elizabeth, and thank you for joining us.
Hi, Ruud. Thanks so much for having me. I'm really excited to be discussing Themis and Bottomline's latest research findings and analysis on insider fraud today with you.
Great to have you. Elizabeth, you have been researching insider fraud and banks, and you worked on the joint Themis Bottomline survey report, Insider Fraud in Banks, the Post-COVID Threat Landscape. So kicking off our conversation, maybe you can talk us through the various types of insider fraud that banks should be aware of.
Yeah, absolutely. And thanks again for having me today. So I guess an increase in insider fraud really since the pandemic has made us, at least at Themis, really look more closely at the sort of state of typically discussed issue of insider fraud. So yeah, I think just to quickly review some of these key types of insider fraud, just so that we can all be on the same page and recognize really the broad scope of the problem of insider fraud. It really does come in many forms, I think. So insider fraud generally, in a lot of people's minds, I think, evokes an image of, the malicious employee really siphoning off company wealth for sort of private gain in big ways. But really, it can mean a lot more than that, I think. And malicious attacks are really only one part. There's also less intentional and more carelessness-driven kinds of fraud, for example. So just to split this into two sort of main groups of fraud, there's the classic malicious internal fraud, and importantly, collusion with outside actors as well. So this can really encompass, the classic rogue trading, collusion with poorly vetted third parties, the active hiding of losses, account manipulation, and sort of intentional diversion of funds. An important part of this, I think, is data theft and collusion with, external bad actors to sort of sell account credentials. And I think a unique part of malicious fraud is often that it takes place on a sort of drip by drip basis over a long period of time often at quite a low level to go unnoticed. But yeah, it's really also important to recognize less malicious and less intentional forms of insider fraud stemming from negligence, carelessness, and naivete on the part of employees. And I think it's interesting, these are often less damaging as individual incidents, but are actually more prevalent in number. It's the dominant form of fraud. And in our own survey research that we undertook for this project, we found that 77% of respondents were very concerned about non-compliance issues that cause insider fraud in this sense. So really, just to get into a little bit of detail, it can encompass, careless behavior towards, in particular, digital security, which is a big issue during COVID. Social engineering attacks, so phishing and smishing of employees, particularly sort of naive employees with less of an understanding of tech, as well as agnostic fraud. So this is not particularly targeted at the company in a malicious sense, but still is for personal gain. So that would include things like not working or travel and expense fraud. Some of the hotspots for negligence can include call centers, where there's a really high volume of calls and mistakes can easily be made, as well as the remote working environment now. So unencrypted devices being stolen, bring your own device policies being poorly implemented, and this sort of thing. So yeah, it's really quite a diverse terrain. And it's important to keep in mind these more benign or less intentional version. I shouldn't say benign because they can be quite harmful, but more less intentional forms of fraud that have particularly, I think, been of importance during the pandemic.
And I think due to the pandemic, the basic level of fraud has increased, right? So we are seeing new and different weaknesses. And as fast as we plug holes, fraudsters find new ones. From your research, what is driving this?
Yeah, absolutely. So I think, insider fraud has always been around. It's always been an issue, but alarmingly, banks are really facing the highest rates of insider fraud, in recent history. So there definitely does seem to be a real uptick, particularly since the pandemic, and it really does seem to be linked to that. And just to give a bit of a sense of numbers, according to our survey, 75% of banks have perceived an increase in insider fraud since this pandemic, and this is really reflected in other data. Major banks have seen a jump from 22% of all fraud being attributable to insider causes in 2018 to 38% in 2020. So this is a pretty severe jump. And I do think that the pandemic has created a sort of perfect storm for insider fraud, unfortunately. And this can be usefully understood by referencing the classic Cressy's fraud triangle, which was coined by Cressy in the 1930s and remains very relevant today. Basically, it's a trifecta of three factors that exacerbate, that come together to form this perfect storm. So that's considered to be opportunity, pressure, and rationalization. And together, they really can create a pretty an environment that's very conducive to insider fraud. So in the current context, there's definitely more opportunity for fraudsters. At banks, it's recognized that sort of control and compliance tended to take a backseat when banks were sort of forced to prioritize contingency planning, crisis response, and really trying to uphold any semblance of business as usual. And unfortunately, this led to at times overriding of controls. This definitely created loopholes for fraudsters. Also, the remote working conditions created new opportunities. Our research indeed found that 80% of respondents saw higher risk of insider fraud and data leaks just from the fact that so many employees are working from home. And more digital payments have also been coming to the fore. Physical cash and card payments are less and less common, and digital payments are more and more common, making all that data that's passing through digital transactions more vulnerable to attack. And I would just say that I think this does call for an increase in automated solutions to fight that fight. 75% of our respondents saw real value in automated solutions around fighting fraud, including payment fraud. And just to complete the Cressy's fraud triangle, employees are also coming out under a lot more pressure and a lot more, and may see a lot more grounds for rationalizing fraud. Health and financial issues, performance, emotional pressures, all create increased demands on employees, and they may find themselves turning towards, options that they would previously not have undertaken. And indeed, 26% of our respondents saw financial strain and uncertainty as increasing fraud. So yeah, these are some of the drivers that are really present right now, and in fact, Themis doesn't really see them as likely to go away even after the pandemic. Particularly given that COVID, I think, has really accelerated this transition to digital work and accompanying risks of that. What do you think of that, Ruud?
Yeah, right. Yeah, I think due to the pandemic, we have seen an increase in fraud attacks because also the growth of digital activity, right? People working from home, bank branches closed, so people had to go through through the digital channels. That created more opportunity for fraudsters, I think, and there's simply a larger pool of victims and a higher success rate for fraudsters. And in addition to that, I think that banking customers have there's a need for speed, and with faster payments and instant payments, banks only have milliseconds left to detect fraud, right? So there's an increase of opportunity for fraudsters. And then I think there's also the issue with impersonation fraud, like APP or business email compromise. So as you mentioned, social engineering, phishing are common fraud methods. And fraudsters are good at impersonating people because they have access to huge amounts of digital data from individuals and organizations. But that information needs to come from somewhere. And maybe it comes from legitimate websites, but it could also come from data leakage or data theft from within a financial institution. I think that is a weak link, and that is where the opportunity is, right? So, for example, a fraudster may collaborate with someone within the organization who helps the fraudster to gather information on a customer and then use that information to follow up with targeted phishing messages. And I think another aspect, it's that is what's called the Great Resignation, right? So the pandemic and the working from home culture might also have raised employee loyalty issues. So Great Resignation is going on, and it's at a global level, right? According to a Microsoft survey, 41% of global workers were considering quitting or changing professions in 2021, and that is not going to decrease in 2022. And I also read that in the US, more than 4.4 million people quit their jobs, according to the US Department of Labor. And this makes impact because that makes life harder for those who remain on the job. Knowledge is lost. And in other words, there's a combination of, I think, frustration, less supervision, and that feeds a greater rationale for undertaking illicit activity.
And off the back of that, I guess I wanted to ask a bit more about your own experience, Ruud. I would be very curious to see if you think banks are doing enough to combat this growing threat of insider fraud.
Yeah, that's a good question, Elizabeth. And I think the short answer is not enough, or simply no. I think when I speak to financial institutions, to banks, the focus is often on external fraud, right? External attacks are easier to spot. When it comes to insider fraud, I always say you don't know what you don't know. For example, I've spoken to banks in the past who told me that they have never experienced insider fraud at all, right? So, and when speaking or asking about internal fraud, people immediately think about financial theft and do not see leaking data as an insider fraud incident. And as you referred to already, the collusion between internal staff and external bad actors, that is often very difficult to prove. What I'm hearing from banks is that there is often a suspicion. It's hard to get the evidence. And that's the reason that the insider fraud incident is reported as an external fraud incident. So I strongly believe that insider fraud is often underreported or not reported at all. And that makes it very difficult for senior management to create a business case and make a decision about investing in an insider fraud solution, right? So as I said, you don't know what you don't know. So if you think there is no insider fraud, then you probably do not have the intention to put measures in place. But in speaking to banks, I believe that fighting against insider fraud is equally important as fighting against external fraud. So not all fraud attacks come from the outside. And unfortunately, numerous financial institutions have found, often too late, that their own employees were misusing debit cards issued by the financial institutions. So while I think the vast majority of employees can be trusted and are honest, the danger of the insider threat is that it's the bad apple that can take down the entire tree. So, and again, insider fraud is a very sensitive topic. Not many financial institutions like to talk about it, and for good reasons, of course, right? There's a lot of sensitivity behind that.
Yeah, that makes sense.
In the case of internal frauds, there are several reasons why better prevention practices aren't actioned or escalated as quickly as they ought to be. Maybe you should chat about the why behind this resistance, Elizabeth, or denial, if you like it, in a bit more detail.
Yes, absolutely. We see it as a key issue as well, from a Themis perspective. I think it is interesting to sort of frame resistance within the broader context first. I would say that arguably some of this resistance isn't really intentional in a way, but rather the sort of product of a pretty demanding and rapidly changing risk and business climate. There's a lot of factors, I think, going on and contributing to this overall tone towards insider fraud. So, first of all, I would flag that banks are definitely facing a lot of competing priorities right now. I mean, take COVID, maintaining business as usual. These are just the latest of ongoing challenges that banks need to balance alongside one another. FIs also arguably grapple with, pretty poor, might I say, existing legacy systems that often take a lot of, time, money, skill to keep up to date, aren't always sufficient in doing their job. Yeah, insufficiently strong tools are often flagged as sort of the biggest problem from banks that we've spoken to. In our survey, 50% actually flagged this as the main problem, which was the highest percent of among other problems that we explored. Specifically, the tools aren't always tailored to specific risks and lack, targeted monitoring. So resources are often wasted on tracking what can be characterized as relatively low risk activities, while high risk ones are neglected in terms of getting that real end-to-end visibility. And they're sort of lacking that holistic risk approach. And in general, we see that tech needs more attention. I mean, it's great to have a good foundation in the basics, but the current tech trends aren't really detecting things until it's too late. And this includes things like physical document examination, network data log reviews, and manual audits. There's also inadequate resources and capacity and budget for these issues. 39% of FIs were found to be understaffing and monitoring fraud and having inadequate training. That being said, you still have to ask, why is it that there aren't more resources going towards this issue? But yeah, I think it's definitely a multifold challenge that's arguably being sort of reinforced by a reactive rather than proactive response to fraud. And meanwhile, there's arguably not much of a business case in the short term for escalating suspicious activities all the time. Would you agree with that, Ruud?
Yeah, I think in this business, I've never heard so many synonyms for the same. It's also a matter of language and tone, I think. So I hear people talking about employee fraud, insider fraud, bad actors, unethical behavior. Or a juicier one I heard is the silent killer within the organization. With so many synonyms, that tells us actually about the sensitivity of the subject, right? People don't want to make it explicit. I think employee fraud sounds very unfriendly, as if you don't trust your own people or your own peers. But when you call it insider risk management or internal risk management, then suddenly you have a better topic for a conversation. At least that is my experience. And then there's also resistance when it comes to a big brother is watching you culture. I think there's also a privacy aspect, employee privacy aspect, but also a customer privacy aspect. So on one hand, banks need to protect customer data and therefore would need to check if employees are misusing customer data or leaking customer data. And think of an example where an employee is serving through customer data outside business hours without business reasons. You would like to know that, right? And take action and prevent that, as it might bring the bank in trouble because GDPR regulations are breached. But on the other hand, you need to respect employee privacy as well. So when you are monitoring employee behavior, there must be transparency about the nature and content of the monitoring. So maybe you should monitor employees having access to sensitive or very privacy related data, but not monitor their email traffic or team chats, to mention a few examples. And that depends on the business, of course. But I think for the purpose of monitoring, it must be specified, it must be explicit, and must be legitimate. And there's also a deterrence factor. So if you know your activities are monitored for legitimate reasons, you might not even think about taking the opportunity in terms of, of the Grotens triangle. Hey, Elizabeth, in your research, you found that 48% of the banks that were interviewed considered damage to consumer trust and brand reputation to be the most damaging consequence. So, so what needs to happen in your view?
Yeah, indeed. There's a lot of damage coming from insider fraud. And as you say, the extent of damage may actually be underrated because of this tendency for banks to sort of under-discuss insider fraud or, classify it as something else. So, it's a huge issue and it's generally under-discussed. And damages can really span from operational impacts to direct financial loss to, as you said, reputational damage and regulatory implications as well. But yes, from our own internal research, it was found that the highest number of respondents said that reputational damages and consumer trust was the most serious consequence of insider fraud. And in particular, I would flag data breaches as being very damaging to reputation, particularly now that, so much client data is online and vulnerable to fraud. So it's become an increasingly sensitive space with repercussions for consumer trust. And so I guess just to pivot off of that, I think that, with all of this in mind, we really need to ask what can we really do to improve the landscape? There's sometimes a lot of sort of pondering and pontificating that is done on these issues, but we really have to think about what push factors are available to us to improve the situation. And I guess I would like to start with mentioning regulators as playing an important role. We can put it all on banks, but we have to also discuss the broader landscape and how others can contribute to this fight. And I think GDPR is a really good example of the positive impact that regulators can have, by requiring companies to really consider in a deep way who has access to personal customer data, how it can be securely stored. We saw a real improvement compared to places where this hadn't been undertaken, such as in the US. But in general, I think regulation has been criticized for being a little bit too ambiguous on this front. And indeed, our research reflects this, with 33% of our respondents saying that they would appreciate, greater clarity and guidance from regulators, and another 30% saying that while regulatory expectations are quite clear, more guidance is needed on actually how to get those done and fulfill those requirements. And I think in this sense, COVID could actually have a silver lining, because I think it could actually jumpstart the conversation from regulators on necessary changes. And so this could actually be one benefit of a truly challenging situation. And we're already seeing some regulators coming forth with heightened pressure in this space. In March 2021, we saw the UK PRA underscoring expectations to build up bank capacity to deal with, the various stressors resulting from COVID. And this does include fraud. in particular, they pushed for more of a prevention as a means of resilience attitude from banks. And I think that this definitely speaks to insider fraud as well. And then simultaneously, in the same month, actually, the Monetary Authority of Singapore also published recommendations on operational resilience during COVID-19 and specifically around remote working. And I think that, this is really encouraging. They specifically flagged the need for periodic review of insider fraud risks in a post-COVID world. So there are moves that are from regulators that are emerging. And I think we can hope for more. That being said, I don't think that banks should really wait for this regulation. There's really no reason to, particularly given that from our research as well as from broader conversations on this subject, it's clear that banks are the ones that have suffer the consequences of this in the end. So it's really in their best interest to be proactive, even if regulators are not always ahead of the curve on this.
And another interesting fact from the survey, Elizabeth, was that the technology employed by many banks is falling short, right? Its ability to prevent and detect insider fraud. And I believe one of the conclusions was that many firms are still relying on outdated and traditional forms of insider fraud prevention. And actually, those technologies are no longer sufficient, or detect too late after the damage is already done. Speaking to banks, I see that if there are systems in place, then it's often based on analyzing log and audit files from systems. The issue with these log and audit files is, well, the quality of the data, but also the availability of the data, right? So these files have never been designed to discover internal fraud. So there are really limitations on the systems, on the technology out there. That all depends on data availability and quality. One of the things, often few actions, example, employees surfing through customer data, that's not detected at all, right? It's not clear what's being looked at. And that entire activity is not catched in log and audit files. And I also see institutions are making use of agent-based monitoring. So basically, they install software on every single laptop and every single desktop to monitor employee activity. Well, from a technical point of view, that's a maintenance nightmare. I also know that from a performance nightmare, it's not suitable for large-scale implementations. Plus, from an employee privacy aspect, everything can be monitored. And when we talk about insider fraud or the insider risk, we have to respect privacy regulations. It means you cannot monitor everything, and even in some countries, that's not allowed by regulation. I think banks should be more open to explore new technologies out there by which they can manage their insider risk, regardless of whether the users work from their homes or from their offices. But it should not invade their privacy, employee privacy, and the focus should be on the business-sensitive systems only. So I'm not meaning the email traffic or the team chats.
Absolutely.
One last thing, Elizabeth, based on your research, what are the biggest takeaways for the audience?
Absolutely. And it's been an immense pleasure speaking with you about this key issue. I think my main takeaway and what came up again and again in my research, in discussions with, a lot of cutting edge thinkers on this issue, in trends, is that we really need to be pushing for what I would call a detection as a form of prevention agenda. This means taking a proactive approach on the part of banks. And I really see this in the interest of banks themselves. In terms of reputational, operational, financial priorities, it all aligns. And I would say that by taking this deeply proactive detection and culture-based approach, rather than waiting for this growing problem to chase them down, it's really in their best interests.
Right. Thank you, Elizabeth. Unfortunately, that's all we have time for today. So all that's left for me is to thank you, Elizabeth, for joining us today's podcast on internal fraud in banks.
Thank you very much, Ruud.
And for the audience, thank you for listening. For more information on this topic, please get in touch with the Bottomline team or visit our website. See you all next time. Thank you.
Payments Podcast from Bottomline Technologies.